feel that Halloween kicking in, dude? It's scary, it's tricky, and I love it, dude. This is what Halloween's all about, dude. When you question everything constantly, that's what I love about this moment here. And let's get right into it because, you know, as scary as it looks, as ugly as things are, you know, I still basically hold the same thesis. Am I stubborn? Am I an idiot? We'll find out soon enough. We will. But one thing I've been looking at recently, this past week actually, is I've really been checking out this part of the stock market, this part of the Dow Jones, 2015 into 2016. And there's a lot of similarities to what we're seeing here in this stretch down to what we saw here. One of them, and this is a really good experiment that I would suggest any of you do if you're trying to understand how sentiment in these markets works. But watching people do market analysis from 2015 into 2016, it's perfect. The parallels are screamingly obvious from 2015 to literally right here in 2022. One of the main things is that everyone thought there was going to be a major collapse in the market here, literally because interest rates were going up, right? So this whole, period where the Dow Jones kind of stalled out and was just hanging out down here, tested that 200-week moving average 2 times. Ooh, we see that same thing here, testing the 200-week moving average 2 times. And a lot of the fear was due to interest rates rising. Now, there was some other fear as well. It actually had to do with Donald Trump potentially being elected. Everyone thought that was going to crash the market as well. But let's take a look at what interest rates did right here. So in 2015, right, October 2015, you started a major uptrend in interest rates that, as we've already discussed many times, went all the way into the summer. They peaked in the summer of 2019. So this is all interest rates rising, right? And so in the stock market, we saw the fear sort of kick in right here, summer 2015, right? The interest rates started rising on this big green candle in October 2015. But this rounding top, this fear of interest rates rising started happening right about here. Now, yeah, we did stall for a good little while here. We stalled for about a year, tested that 200-week moving average 2 times. And a lot of people probably consider that to be a bear market, basically. But what came next? A massive, massive run. And Bitcoin had its run in here too. Altcoins went absolutely insane in here, right? The stock market topped actually after crypto topped, right? So Bitcoin topped back here about this month. The stock market kept going. So this is all during an interest rate upcycle. And here is the fear leading into the interest rate upcycle. So that, take that for what it is. I mean, that to me is pretty interesting. Okay. And then if we keep looking a little bit deeper into the Dow Jones here, we see, like we've said many times, interest rates came down. They actually peaked back here, right about here. They peaked in the summer of 2019. Stock market had its blow off top, right? Interest rates coming down. Stock market has the blow off top when interest rates coming down. Why is it having a blow off top? Because everyone says interest rates are down. Finally, the economy is saved. Everything's going to be fine. And then you have that euphoric blow off top, right? And then what actually happens? The market freaking crashes violently, right? Now, what's really interesting here is if you are in the moment and you're looking at the market in the moment and you see this crash, you're obviously thinking, oh, yep, no, the bubble's popped. You literally broke the parabola. It's over because you broke below this previous low. Like, it's over. Hello, goodbye, good night. Everything's over. And the last thing everyone expects is that the thing rips to more new all-time highs. What's interesting here is that this crash found support on that major fearful moment that we had in 2015. That's where this thing stopped. It stopped right here. Now, that is a bit similar to what we're seeing here. Where is all of this fear potentially culminating? It's potentially culminating on top of the previous all-time high before a major crash. So structurally, this thing is still intact. So at this point, it's still too early for me to say that, this is going to continue to the downside. There's too many signals of inversion theory that are going off of like, no, this is not the beginning of a major crash. You got to hedge that it might be, right? You have to, because when you really consider the macroeconomic data and just what's going on in the world, you definitely do have a situation where we probably don't have a lot of upside in the market in terms of a macroeconomic standpoint. But in terms of a microeconomic standpoint, I definitely think you're too early to be calling a major, major crash in these markets. Now, tomorrow, Monday, we could have like the Black Monday, like, oh my God, the historic Monday of September. What is it going to be? September 26th. It's like that historic September 26th where the market just waterfall down. Hey, that could happen. One other thing I would consider here too is DXY once again. Now, it did in fact break past that 786. So that, not a good sign, right? That's not a good sign. But though, and I actually did draw attention to this a little while back, that maybe the US dollar is heading to this 1618. Sorry, not this 1618, but this 1618 from this swing high to this swing low here. And look where the dollar has stopped. So that's interesting. That's interesting. That could be a major reversal point in the dollar. Does that look like a blow off top candle to you? I don't know. We'll see. We'll see. But there definitely seems to be a bit of confluence in this 1618 level that the dollar has reached out to, and the fact that the Dow Jones did not close below the previous all-time high back in February 2020. It's now double tapped over it, right? It's back tested the previous all-time high, right? So at this point, you got to be thinking, okay, that's pretty normal. That actually happens quite often throughout history. I'll even just go back. I was looking way back on these because here's kind of an example of what I think could be sort of happening, right? So long term, this isn't, great, but, short term, it's fine. This kind of seems like what the situation we're in, because look at this, right? Like, look at this move, right? This happened over a longer period of time than the move that we saw between March 2020 and November 2021. This move, occurred from 62 all the way to 66. But look at this pullback. Look where it found support. And look what month that bullish candle showed up in. October, right? And it found support on that previous all-time high. I would submit that something similar to this is occurring. I would submit that we might see sideways chop for a very, very long time after this market concludes. But I do think that it would make a lot of logical sense that we've now back tested the previous all-time high and we're going to move to the upside, not necessarily to another new all-time high or maybe a small all-time high. That part doesn't really matter so much. What I'm looking for here is essentially a retrace in the Dow Jones, right? That's what we got here. We had a lot of sideways action for a long time, but we really did get a retrace. And in the time that we potentially may get this retrace here, it's kind of the same rules that apply to the altcoin market with the stock market. And you can almost think of the crypto market as a whole as sort of those mid-cap to small-cap assets that move violently into retraces on the larger cap assets. So the larger cap asset being the Dow Jones, NASDAQ, S&P 500. If these have a retrace, even if it's just sort of like a sideways weak retrace, that is, that's the quote-unquote altcoin season. But it also happens in the stock market. And I do think that this is a reasonable moment to expect something like that to happen. Obviously, you have peak fear, like ultimate Halloween nightmare fear coming in at this moment. A lot of people are probably thinking, yep, no, September 26th is going to be like the day that everything goes to hell in a handbasket. And it may very well could be. It may very well could be. But you got to hedge that that's also not going to happen in the same way that you're hedging that it might happen. How are you hedging that it might happen? Well, you're holding cash. How are you hedging that it's not going to happen? You're still holding altcoins, right? I mean, that's really simple. So one thing that seems to be pretty interesting, there's a lot of this Halloween trickery out, is look at what XRP is doing, right? Like, this is pretty interesting, right? XRP broke out of this major downtrend line. Like, okay, pretty impressive right here. What's it doing now? It's finding support on top of its 200 period moving average. That's pretty interesting, right? So, I don't know if that's necessarily the keys to the kingdom here or the missing puzzle piece of what's about to happen, but it does seem like there's some strength in the altcoin market at the moment that the Dow Jones is testing the previous all-time high for the second time, not closing below it. Do we think it's a coincidence that the Dow Jones is closing right on this moving average here? Well, I already told you a million times that nothing is a coincidence, and that moving average is coming right at the previous all-time high. Like, okay, major confluence, peak fear, like absolute fear. Every single headline, literally every single headline is like panic, it's over. Like, oh, here comes the waterfall. You gotta take that for what it is. That kind of sentiment means that the downside is overcrowded. That means that really almost everyone at this point has gone short. And that's the trick of Halloween, right? Like, this is the trick. Like, I mean, I can understand going short at this point. I can understand thinking like, okay, time to make money on the downside. I can understand that. But really, I'm not convinced. I'm not convinced that we're about to crash here. I'm just not convinced. So instead of going short at this point, I'm holding cash. I want to see how it plays out. That's really more what I'm interested in. Yes, I'm hedging for a major crash. I'm not putting a ton of money into this market, even though in my heart, I'm like, dude, like, this is probably the time you should be buying more than you've ever bought, right? Like, probably when the fear is just at that maximum. But if we really just look at the chart and we look at history, we realize like this is nothing new, right? In fact, this is exactly in line with what we've seen many times all the way back since the beginning of the stock market. And the interest rate rising cycle that we've seen so many times is just doing what it's always done, where the interest rates start to rise. There's fear leading into that rise. That's what this is. There's fear leading into the rise of interest rates. And then the interest rates start rising and then the market rips. I think that's similar to what's going on. This is the fear of the interest rate upcycle, right? And then the interest rate upcycle begins, and then the market starts to move to the upside. That's what's the most logical thing that's going to happen, right? Now, maybe this time's different. Maybe history doesn't repeat itself this time. Maybe, right? Maybe. And that's why we're hedging. That's why we're holding some cash. But realistically, I'm playing by history. I'm looking at history and I'm thinking that like this is not different at this point. This is not different than what we've seen in history. So it's scary. It's Halloween, get ready for the Halloween tricks and have fun because, it's supposed to be fun. Don't let the fear get to you, right? Be objective about what the fear represents throughout history, right? And I'll just say, come on, I just say it one more time because who is the person who is really banging the table about the big stock market crash coming here? It was Robert Kiyosaki, right? You can't miss Robert Kiyosaki, right? He's all over everywhere, dude. This guy is living for the market crash. Back here, he was the one that's like, yep, nope, here we go. This is what I predicted my whole life. That's what he's been saying all through here. Yep, here it is. This is what we've been predicting like forever. And it's like, dude, you really want a crash. You're projecting, and a lot of people, this is a lot of people. A lot of people are projecting what they want onto the market. And you obviously can make a major bear argument by looking at this. You could be like, yeah, for sure. I can give you a million reasons why this market is going to crash. But I'll say, as a counter argument, one reason you cannot give that the market is going to crash is raising interest rates. If somebody tries to give me that reason, oh, yep, no, they're raising interest rates. That's why the market's going to crash. I will obviously be like, you are severely misinformed. So let's just remember that everyone's thinking the reason that these markets are going to crash is because of the tightening cycle. But that is not why they will crash. If they crash, it will be for some other reason. You have to understand this. And so that's why the chart could be predicting something that's about to happen in history that we don't see, some type of black swan. Maybe that's what this chart is telling us. Maybe that's what this downtrend is telling us. Well, it's only a downtrend if you zoom in. If you're way zoomed out, it's still an uptrend, right? You have higher highs and higher lows. And just remember that even the trend can be very tricky. Like, for example, right here, you make a lower low, right? You make a lower low in March 2020 after December 2018. You make a lower low and you're thinking, oh, maybe the trend has changed. Nope, did not change at all. So at this point, we have literally no reason to think that there's a trend change. We're still making higher highs and we're still making higher lows. So, you know what I mean? Like, listen to what the market is telling you. Like, what is the chart telling you in this point? It's not even nearly as tricky as it's been in the past. At this point, it's pretty basic. At this point, you basically see a giant uptrend on the monthly candles. So, you know, that's the way I'm interpreting this, right? Yeah, I'm prepared for nightmares, but the fact that I don't really know what's about to happen and the fact that Halloween is coming is like, yeah, like this is the spirit of Halloween. Like, you know, here we go. Like, let's get excited for all the tricks that are about to unfold before our eyes and realize this is a learning experience. You know, this is a huge learning experience for everybody who's watching the market right now, because whenever this resolves, whether it resolves to the upside, whether it resolves to the downside, we're going to remember, everybody who's been watching the White Knuckle Report, everyone who's been paying attention to this market is going to remember how all of this felt and then how all of those feelings resolved. That's what's great about what's going on right now. Huge learning experience. You're in the school of reality right now, and this stock market is a really, really great tool of learning. So that's why I find it interesting to go back and listen to what people thought at this time, you know, back in 2015. What was the sentiment back in 2015? And then sort of try to consider what are the parallels in sentiment of 2015 to today. Well, you had the same interest rate fear sentiment. That was the same thing that was going on in 2015 that's really going on today. And what did it result in? It resulted in major upside that nobody saw coming. So in this moment here, now we're living it. I don't have to go back on YouTube and watch videos from 2015 on YouTube. I can just be like, I'm here, I'm living this, I'm remembering this, I'm learning in this moment, and I can't wait to see how it resolves, because however it resolves, that's going to fundamentally change how I think. And that's what I want, you know, to know. That's either going to validate, you know, everything that I've been talking about, or it's going to invalidate it. And I want to be validated or invalidated. I want to know the truth. I want to see it play out, and I want to learn going forward. So that's pretty exciting here. At this point, I'm still bullish, but, you know, I'm hedged in cash. That's for sure. I'm hedged in cash, but I'm bullish. So good.
Sure would be easy to stop now.